Okay, I don't know about you, but I'm very PO'd, and I'm going to explain why in this video. But first, we gotta talk about what's going on in the market today, because Tucker Carlson says aliens are real. We've got news on not only Tesla, actually big news on Tesla, but we've got commentary on what's going on with crypto. We've got some data releases that come out. We got some spending numbers that came out, and we just gotta talk about what the heck is going on in this economy, because I'll tell you, there are a lot of people that are just straight up fearful, and I think they're gonna end up being misallocated. Now, I'm not Mr. Permabull here. I gloriously flip-flopped in January of 2022, and I made it clear to everybody exactly why I flip-flopped, yet I still ended up getting haters for it, just because I said we're gonna be going through a very tough next year, and here's when stocks go back up. And the argument of when stocks go back up, just to catch you up to speed, is basically when the Federal Reserve U-turns, the stock market will likely go up. But this time, that U-turn may actually come earlier in stocks, and we might end up seeing a Nike swoosh into the Fed's U-turn, because the Federal Reserve has changed the way it communicates to the public. They're a lot more clear with their intentionality. And as long as inflation doesn't lead to this unanchoring of expectations to where we would get a Paul Volcker, the Federal Reserve does not need to destroy the economy. Now, according to a CNBC survey, wealthy individuals with over $1 million of investable assets, for those folks, but anyway, those folks think there's no way inflation's going to go back down to 2%. And that may be the common belief of many. In fact, you might be thinking to yourself right now, yeah, man, I agree. I don't think it's going back to 2% anytime soon. And guess what? That is quite okay. I think that is one of the things we have to remember, is it doesn't actually matter if inflation goes to 2% this year or next year or the year after. As long as inflation does not skyrocket away, and as long as inflation expectations don't balloon, we can take our time. We can relax, and we can enjoy the benefits of the stock market still having sales in some corners of it, potentially not Nvidia stock, although Nvidia is very exciting, and basically every single analyst expectation flew out the window after people realized, oh man, Nvidia's revenues could be explosive thanks to artificial intelligence growth. The problem is, now markets are pricing in the following: a 52% year-over-year growth in revenue for 2024, 21% for 25, and 15% for 2026. However, if these are the analyst expectations, then that's already built in. We gotta beat all of these numbers to really see growth in Nvidia stock. And this has a lot of folks saying, in order to really see growth in Nvidia stock, you've got to see an average of about a 35% plus compounded annual rate of growth for Nvidia. And that could be a little scary, because competition, as well as other potential changes in the way artificial intelligence uses chipsets, that is potentially going from a learning method of AI or a training method of AI to a use case of AI, which could shift chip usage, possible that Nvidia might be a little rich. And this is what's leading a lot of people to say, well, we'll just invest in Tesla then, because after all, they are another real-world AI application that's actually expected to make a lot of money off their artificial intelligence. Look, I just released all of my artificial intelligence lectures and productivity lectures in the course How to Make More Money and Get SH&IT Done Faster. It's an incredible program. We just released all of them last night. But I'll tell you, one of the things is that Tesla is actually looking at generating revenue, but not just looking to, they actually are generating revenue from artificial intelligence. Whereas most of the software companies that provide us artificial intelligence APIs, they're either trying to maintain their moat like Adobe or maybe an Autodesk, or they're providing a ChatGPT API and the profitability of doing so is questionable. We know a lot of money will come from artificial intelligence, but we're just not clear who is going to make that money. And with Tesla moving the way it is today, I believe that the market might be scratching their head going, well, maybe the surest bet of artificial intelligence is, after all, Tesla. Now, Tesla could also be moving, at least the way it's moving now, in part due to another reason. That's because, well, two things. Number one, they finally beat their Solar City lawsuit, where Elon Musk was accused of potentially overpaying for Solar City. I actually broke down the entire Solar City evaluation on this channel previously and thought this was actually a perfect acquisition for Tesla because it instantly got them into solar sales and made them a green energy partner from top to bottom. They also replaced their inverter manufacturer, Solar Edge, and now they're in-housing the manufacturing of that inverter. They're doing everything they can to essentially squeeze margins. Not only that, doing everything they can to make sure you are getting as much money possible to buy a Tesla from the government. In fact, now, if you go to the website, cleanvehiclerebate.org, and you live in California, and you make less than $135,000 as a single individual, or less than $200,000 as a joint individual, you could literally buy a Model 3 for $25,000. That's because the starting price of a Model 3 now is about $40,000. But the federal government will give you $7,500, and the state government will give you another $7,500 in California to buy a Model 3. That makes a Model 3 $25,000, which is about $1,000 less than the cost of a Toyota Camry. And that doesn't even include the lifetime value of how little electric vehicles cost in maintenance compared to gas vehicles or your longer-term electricity savings or fuel expense savings, which are incredible at Tesla. But forget about Tesla for a moment and justifying its stock price rise. Let's also consider what's actually happening with retail sales. Well, one of the things that I like to do is I like to look at what Citi analyzes and its credit card spending data. And one of the things that we're starting to see is that credit card spending data is starting to tick up relative to what we had seen in prior years. Now, this is good because it's a sign that even though over the last 6 months of 2022 and some part of the beginning of this year, we had some dicey numbers and things were declining, we're actually starting to see a rebound again. Part of this is likely because the consumer savings rate has actually started rising again. Now, a lot of people think that's remarkable. How is that supposed to happen? We're supposed to be going into a recession. How is it possible that the consumer savings rate is actually rising? Well, it's probably just as possible as Tucker Carlson telling us that aliens exist. Oh, wait, that actually happened yesterday. But it's actually because, yes, even though prices for things have gone up, we are making more money. In real terms, our incomes are finally positive. It's because we're still growing our incomes. Wages are still rising by the rate of about 5 to 6%, at least if you look at the ADP survey for year-over-year numbers. And if you look at month-over-month, we're still seeing wages rise between 3 to 4%. Now, you might ask yourself, but Kevin, even earlier you said there's no way inflation's going to go back to 2%, especially if wages are rising like that. That's bad, right? No, actually not necessarily. In fact, because consumption makes up about 70% of the economy, you actually don't need 100% of wages to match 2% inflation. You actually can have wages rise by around 3%, slightly more, slightly less. It's an uncertain number. It's a theory. But you can have wages rise somewhere around 3% and still be consistent with 2% inflation. That's incredible. Now, that's still not going to twist people's arms and convince them that inflation will end up proving to be transitory. That will end up having taken many years. It wasn't as transitory as we'd hoped. So when we hear that, we think, oh, well, that's a stupid claim, because that's what the Federal Reserve used to explain why they're still printing money in March of 2022. That was stupid. That was really dumb. Inflation wasn't transitory that quickly, but it will end up proving to be transitory. And this is why it's worth considering that whether or not we go into a recession, honestly, might not matter. All I have to ask you to do is search Google for the DAX. It's the German stock exchange. Well, it's not the German stock exchange. It's the largest 40 blue chip companies in Germany, an economy that's actually technically in a recession, forecast to stay in a recession throughout the next quarter. That is like the Dow Jones Industrial Average in America. And the DAX is sitting 1.8% off of its all-time highs. In fact, it's doing extremely well year to date, and it's doing extremely well compared to all-time highs, which is really remarkable because you think, wait a minute, we should be doing worse if we're going into a recession, right? Not necessarily, because I also want to remind you what a recession actually is on paper. A recession on paper is simply negative growth compared to the year earlier. There are actually many different kinds of recessions. You can have a revenue recession, an earnings recession, an emotional recession. Okay, I made the last one. I made the last one up. But the point is, think about this. If you had a lemonade stand and all of a sudden you sold, $50 every single day, and then somebody printed a bunch of money, and all of a sudden you went to selling $100 per day, and now, after all that stimulation, which was really exciting and fun, big growth, yay, that was fun. Now, I'm sorry to say, you're only selling $98 a day of lemonade. And yeah, inflation has hurt your margins a little bit, but guess what? Your bottom line is still way bigger than it used to be. And even though 98 is bigger than 50, you are technically in a recession thanks to this decline. Expand this to the global economy or even the United States economy, and all you have to have is a tiny little negative for 2 quarters in a row, and you're technically in a recession. We technically also already had that in Q1 and Q2 of 2022, so maybe the recession is indeed already behind us. But whether or not it's behind us or in front of us doesn't really matter. The economy seems to have, the stock market seems to have crashed in 2022, primarily because of the fear that inflation was never going to be able to be, quote unquote, put back in the bottle. The fear mongers who like to appear on CNBC to promote their products, whether it's gold or bear products or bear options, want you to know that once inflation comes out, there's no way it's going back. Yet the reality is quite different. Inflation is, as Milton Friedman said, a monetary phenomenon. And when you print money too rapidly, you get inflation. When you print money at a regular pace, you get very little inflation, mostly because innovation is a massive anchor that creates more deflation than it creates inflation. And if you don't print money at all, or you print negative money, which is what's happening now, you should start expecting deflation, which is actually exactly what we're starting to see with companies like Costco talking about reducing prices because they make money off volumes. Costco doesn't make, in fact, most of their money off of selling you stuff. They make money off the membership. So they're willing to tussle and start a price war to make sure people to go to Costco and not anywhere else. And you're seeing every retailer start making adjustments and reducing prices and realizing that they have to start pitching not only value to their customers, but they actually can't raise prices anymore. You look at the forward-looking price increases of what companies are doing, whether it's staples like Procter & Gamble, Kimberly-Clark, Pepsi, Coca-Cola, McDonald's. Look at any of these companies. And the forward-looking projections for price increases, that is not what they've done in January, not what they did January compared to last January, but looking forward, what are we looking at? No more massive price increases. In fact, we're more likely to be expecting price decreases. And I encourage you to, when you hear about price increase data, just ask yourself, is this price increase data comparing to 2022, which we know the prices have gone up? Or is this, hey, we're going to continue raising prices? Those are going to be very, very different analyses. So consider that if you're worried about inflation. And never forget that the Federal Reserve does not need 2% inflation. They need an average of 2% inflation. If you've ever played with averages, you know that can be easily manipulated to be 2%. And as long as the 5-year break-even rate, which is the market's expectation of inflation, is the way it is now at 2.19 and trending down, we're looking good. That's why the market is pricing in a near 75% chance of the Federal Reserve pausing at their meeting in 2 weeks. Actually, it's in 1 week. In fact, it's 1 week from today. Today's already June 7th. Yesterday, I released all of the lectures, by the way, in the AI course, which is the How to Make More Money and Get SH90 Done Faster. They are phenomenal. Honestly, I was really mind blown by some of the lectures. Actually, quite frankly, a lot of the lectures. But I look at the content we put out there yesterday, and I'm like, oh, wow. Like, a lot of this stuff, like, this is going to make all of us as employees at all of our various different companies a whole lot more productive. So we're really excited about the content. And so hopefully you are as well, and you get a massive productivity boost. So check that out, link down below. It comes with all the course member live streams. But of course, I'm pissed because I don't know what it is But today, my entire network is basically bogged. We got rug pulled, and I need to rebuild the entire network where this studio is. I could go to my other studio, but unfortunately, I need to get to Texas because I'm conducting an interview, and then I gotta get back from Texas all today. And then I'll probably stay up all night fixing this. But I will get it fixed. But I am pissed about that. I wanted to take a massive hammer. I had the feeling I wanted to take a massive hammer and show it who's boss. But then I would probably had to have waited 3 days for new products, so I tempered my frustrations, and I didn't go for the BFH. Never heard of a BFH, have you? It's a big fucking hammer. That solves a lot of problems. Anyway, that aside, I'm very optimistic about Tesla, the $7,500 tax credit for California, and the news that's going to create is great for Tesla. Dave & Buster's beat on the bottom line, but missed on the top line. Dave & Buster's and retail stocks might be something to pay attention to. For about the last week in course member live streams, I've been talking about how retail might be the most underpriced sector in the economy right now, and with retail spending ticking up and savings rates ticking up, maybe pay attention to retail. Etsy's done really well the last 3 days, and Dave & Buster's been doing well as well. China, I wouldn't bet on China. Remember when yesterday the bears were like, bet on China because China's, gonna have a surge in productivity, especially when they stimulate again. Meanwhile, then we get data coming out that Chinese exports fell way more than expected, down about 7 to 8%. This is a problem mostly for China. This is why copper has been falling, iron has been falling. You want to be careful betting on commodities. Anyway, everybody always like, oh, but the EV revolution, Kevin, why don't you bet on lithium? What just happened? There are now companies that are like, the stuff that we extract, like the liquid that comes out when we conduct oil fracking, actually appears to be really rich in lithium. Maybe instead of throwing that stuff away, we could extract lithium from that. Seems like anytime a commodity is needed in high demand, we find new ways to extract it, and that eventually ends up lowering the cost of those. So I'm cautious of commodities, just like obviously at this point I'd be somewhat cautious of crypto. I do think at some point there will be a buy the dip opportunity, but regulators and Congress and courts need to duke out what we're going to end up doing with crypto before I think it's a clear as day investment and something that deserves portfolio allocation. And sure, while I'm a licensed financial advisor, I'm not advising that you do or don't have crypto in your portfolio. I would just be very careful. If I had money on Binance, I probably would get it out. And I'm not trying to cause FUD here, but let's put it this way. The SEC is very powerful. They have a lot of control, even influence of other jurisdictions. And so I wouldn't just be worried about Binance US. I'd also be worried about Binance itself. Because as the jurisdictions come surrounding Binance, assets might end up getting frozen. Just want to put the warning out there. I know that might seem fuddish, so let's move on from that. I would just be cautious right now. Always remember, not your keys, not your crypto. Treasury yields relatively flat. Markets and bears were telling us we were going to have this massive liquidity drain, and the reverse repo facility wasn't going to be enough to protect us. So as usual, more negative noise that probably won't end up being true. The reality is things are actually going pretty dang good right now. I know it might not feel that way personally. It's kind of like during COVID where the stock market was going up and everybody felt like crap because we were on lockdown. So I want to parse that. Yes, in our personal lives, things have gotten more expensive. We're still dealing with supply chain shortages in aerospace and in vehicles to some extent, and there's still frustrations coming out of the COVID economy. But is that a justification for saying, I don't want to touch any stocks, or I just want to be completely uninvested, or I'm too bearish, or I'm going to just wait for the next dip opportunity? Probably not. Is it a justification for going all in on Nvidia? Also, probably not. You probably have to be slightly careful here, mostly just because generally when we start pricing in things like, oh, they're going to grow at 50% year over year, those high expectations tend to get met with a lot of competition and unfortunately missed expectations. Maybe that's why insiders seem to continue selling in Nvidia. If you just look up insider sales on Google for Nvidia, let's just say after earnings, there have been a lot of insider sales. So maybe the insiders happen to know something. But then again, that only assumes people like Nancy Pelosi know how to trade stocks. Because, she also seems to have a lot of inside information. Anyway, I want to wrap up by just commenting that there are now some circulations or comments being made about the Apple headset that it might be too tedious to wear all day long because it's a metal and glass frame that's actually quite heavy and starts causing back of head strain as well as just honestly pressure. There's some people talk about it being queasy when you or becoming queasy when you wear it too long. I want to be very clear because I don't think I've been clear enough on this. I actually think in 10 years, 10 to 15 years, we'll probably have a Ready Player One style world where we can pretty much do everything from our headset. I also think to some extent that's very sad because I remember being a child and I'll never forget taking pictures of events with my father and always feeling like I was enjoying those events through the lens of a camera. There's a massive difference between being present and actually experiencing an event and seeing an event. And I'm not sure that artificial intelligence, augmented reality, virtual reality are ever going to give us the feeling of in-personness. That's not to say they're not going to unlock really cool other experiences. Let's just be real here. It's probably going to be really good for the porn industry. But aside from that, there will be other cool experiences that come from these headsets. And I do think that at some point in the future, businesses will probably incorporate providing these headsets as productivity boosters for their employees. In fact, something that I do for every employee that joins my companies is I purposefully give them this isn't even an example of one because it's a smaller one, but I give them an iPad Pro, a stylus, the keyboard, the magnetic keyboard that comes with this. I give them the noise-canceling headphones. All of this, not like just because, well, sure, it may come across as generous, but the point is they're productivity tools. And if I can invest in their productivity, just like you can invest in artificial intelligence productivity, make sure you don't get left behind as an employee or entrepreneur, check out the course. If we can make ourselves more productive or our team more productive, we all end up winning. We get more done with less time, and then we have more time to spend on things we want to do, engaging and collaborating with team members and humans, a lot of which I think it's really important is done in person. So I'm a big fan of that. Anyway, look, I'm very upset that I wasn't able to be live today for episode 101. We'll have to try again tomorrow. I'm going to fix all of that. I also want to just remind you that even though it is a default and foregone conclusion that most of us will tend to be more negative than we are positive, that things just can't get better going forward, I want to hopefully just give you a little inspiration that things can get better. And I actually have faith that things are going to be relatively better over this next decade. And I would really plant the seeds of investments now. Start that business. Take that licensing test. Get educated. Listen, everyone in my office is, by the end of the year, we're doing multiple challenges. We're going to have a fitness challenge. We're going to use AI. We're going to have a fitness challenge for this. We're going to have, we're all going to be Series 65 licensed. We're all going to be Series 7 licensed. You can do that as well. Nothing's stopping you, right? We're expanding multiple businesses. We're creating multiple new businesses that we didn't even think we were going to start. We've got our Reg A, which hopefully will be qualified by the SEC probably mid-June to the end of August for house hacks. So if you're waiting for that, that's probably what we're looking at. And in the meantime, I'm very, very cautiously optimistic. I don't want to sound like a permabull. And remember, a lot of people got pissed off at me in January of 2022 for finally putting the pieces of the puzzle together and going, oh my God, the next year might actually be really, really bad, which ended up being correct. And I was transparent about that. I made a video. You could go back, search on YouTube, Meet Kevin, $20 million market bet. It's actually a good video to watch. 2 homework pieces. Number 1, Meet Kevin, $20 million market bet. Around 33 minutes into the 35-minute video, I revealed that I sold 99.6% of my portfolio and went 5% short the market. Something worth looking at. Something like that. Maybe it was 99%. Anyway, basically sold everything. And then also another lesson to study is look at worst Fed report ever, Meet Kevin. It should be January 5 of 2022, and you could see one of the things that inspired the massive U-turn. We really realized, oh my gosh, poopy has hit the fan. And it's what we saw then is quite frankly the opposite now. So even though I'm really pissed, my freaking internet, I'm optimistic. I think the bears right now are missing a lot of this reality that this Fed fight to 2% isn't what it appears. Anyway, thank you so much for watching this. I really appreciate you. Please consider checking out my programs on Building Your Wealth link down below because really, I think the value you get in them is actually worth 10x what you pay. I really believe that. And if for some reason you don't think so, send me an email with feedback and we'll make sure to add the value that you think is missing. Thank you so much for watching. Send an email if you need to staff@meetkevin.com, or if you have questions for bundle coupons. Appreciate y'all. Sorry, I'm going to go work on my level 99 fire making now. Sorry I couldn't be live, and we'll see y'all soon. Good luck. Have a great day. Bye. Now, I want you to know this. When it comes to AI, time is what's going to make you money. And if you can prove that value to an employer, you'll always be able to be employed. So this is another way of making sure that you don't get replaced